second Dubai Diamond Conference comes at an opportune time. It's a time where we can reflect back at the success of the diamond industry, the UAE and the city of Dubai, the new capital of the diamond industry. In less than 10 years, it has reached over $35 billion in diamond trade. We strongly appreciate the success, but at the same time understand we have a long way ahead, and this is nowhere near the finish line. We look forward to more.
The Dubai Diamond Conference 2015 was a major success, and that for several reasons. We had, of course, the presence of all these African diamond producing countries, from the large mining companies, De Beers, Alrosa, Indiama, Ambada. The former EU President, Herman Van Rompuy, was our honored guest and did the opening speech. But apart from that, we decided to change the format of the conference. And instead of going with speeches and contributions and PowerPoint presentations, we wanted an interactive model, a model with panels. We hope you enjoy it.
If you look at it today, the local banks coming in, they don't have a network anywhere other than the UAE.
A balance sheet is a reflection of the figures at a certain moment. It's only a picture. The behavior on the account is very important, and I think it's a good message to the local banks over here to build up a network over time when they are really entering the diamond industry.
You have, of course, benefits of having that international network. Now, does that mean that you cannot enter this diamond industry financing it without that international network? No, I don't think so.
If you don't understand the clients, you're not in a position to lend to them. We meet the clients, as Devi said, in Mumbai. We see their operations in Surat. My team has already gone and done that. And that, I think, is the key to keeping the quality of your exposure top flight. Do we have a challenge if you don't have a network? I don't think so.
I strongly welcome the addition of the local banks in Dubai coming into it. I think that's very good for the banks. It's also very good for the industry, and it's also very good for Dubai's broader ambitions of taking a more positive and a bigger role in the global diamond industry.
For us, it's very important that we understand the way you trade, how you do business. We do financing at the various stages that the clients are involved in.
Since local banks are new here, put some hard collateral on the ground, use that as a leverage, because we've seen a lot of personal guarantees, but in the absence of hard collateral, for larger companies where there are not too many assets on the ground, then the personal guarantees themselves will become a point of question and debate within the banks.
Invoice discounting and also purchase financing. We look at the business model of the client, and then we tailor-make facilities to match his business. Now, what we have decided initially on the purchase side, also because the bank is new in the industry, is that we will not finance purchases from non-mines. So we will only finance purchases from mines.
We've gone with the structures largely, which means that if we find post-sale discounting risk to be a bit high, we have had customers who have come to us and said, look, we're willing to provide you an insurance cover, which makes it palatable for you, which is good. When it comes to pre-shipment, we have had customers who have said, look, we can give you collateral and please help us leverage. And they kind of tick all the boxes in terms of being transparent, giving us the track record and giving us the good market checks.
Most bankers, they want to ensure end use of funds. And when you are financing a non-site holder, there's always that concern.
As long as it is a good company which offers the degree of transparency, the degree of comfort which the bank is looking for, then there will be opportunities to partner.
Brinks has been expanding, diversifying since 1859 when they were first founded, just with a pull wagon and a horse. But now they've done security, logistics, everything, and now they're finally moving to financial solutions. Today we're doing gold. Tomorrow, I wouldn't be at all surprised if we're doing diamonds as well.
Banks don't finance or have limited their finances because of of lack of transparency. Have you had that experience that there is not enough transparency in the business?
It's refreshing to see that whole concept validated with the three new banks who all have said unanimously that transparency has not been the issue. What is an issue, and that also is encouraging, it's not an issue, but it's part of a learning curve, is the overall complexity of the business. And the complexity of the business is further compounded by the fact that it's a very international business.
I do believe that there is a fair amount of effort which is required by the banks to really understand the promoters and the business behind it.
The diamond tears here have their 4 C's. Similarly, as bankers, we have our own 4 C's. Mm-hmm. You know, character, capital, capacity, commitment, capabilities, whatever. The most important one is character. You can have your IFRS statements, you can have everything. But if you don't have the character, it's not worth doing business, you know.